Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the buyers remained dominant and in control, and off the employment report, we got a spike into the 01 to 03 resistance area. At this point, heading into the open, the buy side can maintain control above 90.75 to 92.75, but we have to understand that we are heading into the weekend here, and the market is testing larger time frame areas of resistance. So we can see profit taking on first test of pretty much every resistance zone on the way up. 01 to 03 is going to be the initial resistance zone, and if the market continues to hold below it, then we're going to have to be careful on the long side because the market is trading at elevated prices, and you really have to question whether the buyers are going to want to hold risk from these higher prices heading into the weekend, and what the reward to risk is for anyone who's initiating new longs here at 2000 or above. So 01 to 03 is going to continue to be the initial resistance zone heading into the open. In the event of a breakout above 01 to 03, we still have the resistance above, which is going to remain active and in play. 2009 naked VPOC is a spot where sell side can be active, 1175 to 14 quarter, and the 17 to 17 half area are still spots where sell side can be active on first test, and we can simply balance from that point on. On the downside, 90.75 to 92.75 is the most aggressive area of support, and holding above it would tell us that the buy side is continuing to be dominant. A break below 90.75 to 92.75 would bring the overnight low into play, and the initial support zone, 85.75 to 87.75, and a break below that area could accelerate the profit taking here, and we could see continued selling possibly down into 75 to 77, which marks the high volume node of the current developing balance area, and we can basically take it step by step after that. So currently the bias overall in the market continues to be neutral to bullish, and it's mainly a market where we are in a bullish environment. The reason it's neutral to bullish is because we're testing larger time frame areas of resistance, and that can limit the upside. So we have to balance that view. So even though buyers are in control, we are testing larger time frame areas of resistance heading into the weekend. So it calls for caution on the long side up here, and we have to be careful. At the same time, even on the short side, the main edge up here is going to be at the resistance zones. So ideally, you want to secure good trade location, or you want to wait until the market really shows downside momentum, and even then you're going to want to get involved at good enough trade location, because this is still a overall short-term bullish market. So on the downside, 75 to 77 is an area that has potential to get retested if the market completely fails up here. And then the final zone would be 66 quarter, 69 quarter, which marks the bottom edge of the developing balance area and range. So responsive buyers can defend at that point, and we can just kind of balance and remain in the two-sided range from that point on. So those are the main ideas heading into the open. Keep an eye on the 90.75 to 92.75 and 2001 to 03. Again, market holding above the pre-market support would indicate a market that is short-term strong, and we've seen a sell response at 01 to 03, but if we continue to see upside momentum, strong upside momentum and broad market strength off the open, then it doesn't mean that the market has to completely stop at 01 to 03. It can go higher and test the naked VPOC at 09, perhaps fill the gap at 1175, and then we have 14 quarter, which is the current RTH yearly high for 2016, and sell side can be active there. 17 and up is very decent resistance, and that can cap the upside. So once you're testing 17, 14 quarter, those are areas that have pretty high probability of capping the upside today and then resulting in profit taking heading into the weekend. So those are our main thoughts heading into the open. Let's see if the buy side can maintain control, or if this ends up being a failure, and we'll take it from there.